So one thing that you've kind of picked up as the biggest surprise this year has been the lack of inflation. And today's UK inflation data, certainly came in as a surprise relative to expectations. I'm wondering how you position yourself on gilts around this. Does it mean that you're more willing to take on duration risk?
Central banks have been a little bit of a surprise, has made it really uncertain when it comes to positioning in government bonds. So again, this month, there was a little bit of volatility around the reaction function of the Bank of England. I think today's inflation report really discusses just how far they will go in terms of increasing interest rates. So that will reduce some uncertainty around gilts, and it should make it more attractive, certainly versus other bonds.
Interesting you say that, because right here I've got the gilt bund 10-year spread. I showed this chart yesterday, but it's interesting because we've really been seeing that spread tighten. I guess you could argue that's on lower expectations of the BOE tightening versus the ECB. Would you agree with that? Because I know that bunds are part of your area that you wouldn't touch with a barge pole.
Yes, I guess the difference really is in terms of the difference with the growth data. So right now, European growth momentum is a lot stronger than UK growth momentum, and I think that's what the inflation data in the UK reflects. We're seeing a slowdown in the UK economy. We're seeing a slowdown with regard, UK households or consumer incomes are falling, and so that is being reflected in that spread. I think we have the ECB on Thursday, and our view right now is that European bund yields don't reflect the improvements that we're seeing in the European economy.
Remi, are you seeing increased appetite for alternative credit given the search for yield?
Yes, alternative credit has been an interesting area for us for a number of years now. And I think, spreads have narrowed considerably. I think what we really need to focus on, rather than just the reaction function of the ECB, is also the Fed. That really matters for credit globally. And, we have had last week, Yellen was very clear with regards to her outlook for US inflation. This is something we have to continue to monitor. That matters for credit. Also, earnings matter for credit and the outlook for corporates and their balance sheet. So relative to government bonds, credit is still an interesting area. You are still getting a yield pickup. And if you can go into the niche alternative areas, there is more reward to be had. Yeah. But we also need to think about broader issues.
Can you give us some examples of those niche areas and what they might be now? Is energy played out? Is retail an alternative credit area for you? And particularly in Britain and Europe, because certainly they have been the themes in the United States, at least.
Yes, in terms of those niche areas, if we think about credit in particular, loans are still interesting with regards to what a lot of financials are doing right now. I think the results of the stress test suggests that, there is more capital there. So I still think the high yield leverage loans is still an interesting area. But if we move outside of credit and we stick within the debt universe, emerging market debt is also an interesting area. Again, as we've seen throughout the year, spreads have narrowed, valuations are not as attractive as they have been, but it is still an interesting complex.
Remi, when you look at European equities and you take into account the stronger euro that we've seen, how does that affect your positioning within the European equity space?
Yes, we do have to take the stronger euro into consideration because this will impact earnings. We're starting this earnings season rather optimistic. The consensus forecast is optimistic for European earnings, and a lot of that is impacted by the euro. So I think right now we do have to be quite cautious with regards to what the impact of the stronger euro will be for European equities, because we do have a lot of exporters. We have to consider what it means for the DAX index, for example. But I think if we look more broadly, this improvement in European growth is very good for domestic orientated earnings. And we've struggled to find a positive case for domestic Europe. And I think perhaps, maybe I'm being too optimistic, maybe it's early days, but perhaps finally domestic Europe can outperform.
All right.